Okay, let's look at more ABCs, my favorite pullback, and it's quite a profitable pattern, guys. You just have to really get confident with it and learn all its variations. So this could also be seen as an ABC, by the way, ABC with a shake and then go up, down again, go up. So this type of pullback that it does. There are a few types of pullback. Okay, so I just deal with the one that has been the most profitable. So guys, this could happen normally, as I said to you in the past. You know, in the middle swings here, I didn't pay attention to this in the past, or I was looking for this and like for proper pullback like that. Oh yes, to pull back like that, very good. But now in the past few years, been looking more at this swings here between the big candle of the daily. And so for example, if you go on the H4, you would when you start to see, first of all, when you are there and you start to see these wicks here, this doji here, then that's the moment when you go to the H4 or even drop to the H1 and you try to see where you get there. And just a little introduction of what I said last time, guys. We can have a strong move up and then A, B, and C with the shake. Okay, guys, so this is the A, this is the B, and this is the C. Normally we will take an entry at the break of B, but this is a bit of a dodgy area, a bit you have to be careful. A wholesale entry could be here, okay, when it does an accumulation, and possibly a shakedown, okay, which I call also the finger, and I will tell you in the next few minutes what I mean by that. It's a very good pattern, especially if you know the picture that I'm proposing to you. And normally at the break of B you would take this, but sometimes if it is too sharp, too strong, it could go up and then retrace down, faking people out, saying, oh, it's changing again, the trend, this broken B is going down, okay, let's sell. No, and then some of the times does like that, or some of the times still break of B, the price could go up from C and small accumulation and go up straight away. Some of the times can have a small retreat and again go up. And the same is true with an ABC reverse, which I'm going to show you on this occasion because I like to obviously show both sides. So if we have the strong move down and then A, B, C, all right, and the same repeats here. So this would be the A, this would be B, and this would be RC. This would be RC only after we see the swing here has been rejected, and you could have a small pattern here, like a pin bar, a smaller time frame, like a doji or V reversal, something like that you have to see. So another entry could be here as it was here, okay, and it could go down, and again we look for the break of B, right? And again, if it's too sharp, could go down, trick people, and then could go up, sorry, trick people, and then accumulation or shake up, and could go down again. So these are the type of pattern. Obviously, guys, you have to take the ABC, but bearing in mind that you have to follow the actual swings, what they are. Because, for example, if this swing is already on the way down and you see this, let's just make it bigger, this candle up, and you say, oh, this candle up, oh, okay, yeah, looks like there might be an ABC here, and you are on the 15 minutes on 5 minutes chart, then you might say, okay, you might take it, but that will be only for a few pips, because this internal structure here now is in a downtrend, and obviously we don't know yet until you see another internal change of trend, which is also called, some people call it like smart money trader call it like change of character, where it breaks and it continues up. Okay, so that's what it does normally. But anyway, we're here now on the H4 and we start to play the chart a bit more and we see what we get. All right, so actually, guys, let me go. We start to see something here. Okay, so strong move down, and then could this possibly be what I'm looking for? A, B, C. Could this be my C? And if there is, you see this move down is quite strong, guys. Okay, so it's quite strong. So it's true it went up the 21 EMA, but there's not much to say, because if you look on the H4 is actually down. It pierced it and then another candle down. Now obviously if I continue that, it will switch the chart, switch the other candle to next candle, so I have to go candle by candle here. So what we could do now, a proper technique, if we go on the 30 minutes or 15 minutes could do, probably we would wait for a swing here, for a candle or a wick here, and we would just put an order. So basically at the C point, just a little bit above below C, we could wait. It depends how we want to play this. For example, for some more cautious trader or patient trader, say, okay, is he gonna do this now? Is he gonna do this now that it goes down? We get red. Gotta do this now, and then possibly do that, and then shake up, and then down. Or is he actually gonna do that, break the C and then go down? So a bit of caution, because normally I would wait for the to go down, okay, to get a limit. So basically the pair is here. I would wait for 1-2 candles and then go up. Let's see if he fills me. Or some other times I could go with just with a sell stop. Now as a target, I see that there is a structure here, and obviously guys, you would put your support and resistance where they are relevant. I would say there's another one, another one here. There's a structure, but I don't know. I'll just put it there, but I don't think really, because I'm looking for a move that has not to be that I don't mean to, to have such a big risk reward. And so that's what I do now. Go back on the H1 after I've seen things. So remember guys, you could see another candle here, or you could take the just the sell stop. And so I would target, yeah, it is through the break of B, the break of the whole structure, which would be, is going to make another lower low, and probably the other target at this structure. Or you could take the FIBO, and if you see this swing here, okay, you would take that, and you probably would target the minus 27.2, which actually, okay, look, when I look at this, would be coincides with this level. But these are just levels that professionals use, right? So I would say around here, okay, guys, you know, just like that, without exaggerating. Then depending if you got 1 or 2 order, let's just put this there. I think it's just fine, all right? And just a bit more. So guys, that's what you do. So okay, now if you had a limit, you would have been filled. But if you had put it here, for example, because you say, oh, you know, I might not get filled because it did this trap up. This was all liquidity, guys. You see this line here? This is all liquidity, because these are all orders that, okay, the market has to take. So he did that. That's why he did that, because he has to take orders. So you know, there's no worries about that. The professional have to do that. If we had the millions and the billions, it would be fine. Where was it? Did I move it from here? Okay, either way, it was, no, was it above C? Yeah, it was something like that. Sorry guys, just I had to show that if he was a limit or if he was a sell stop. So if you would proceed, then you see, you still get chance to get filled. And actually, I'm a bit upset actually, because it didn't give me the chance to explain to if I go on how to move the stop loss if you had the retrace. But it doesn't matter. We can just go on. Then okay, what I see here now, inefficiency candles. Okay, guys, now let's get rid of it. Inefficiency candles. So what do you think the price? You see this candle and this candle? They actually, well, yeah. The wick of this and this, yeah, they barely touch, but it still is an efficiency because people didn't get the chance to get their order. Drop base and then drop again. This is what I would see, guys. This is another pattern that I use. Okay, it's not the scope of this to say, but because I think it's going to be in the next video, I'll give you an anticipation now. Drop, base, drop. Why this? Because guys, these are, when I say on my video, when I show to you know, my learners, that the students that are in my course, what I've showed this so many times, and drop, base, drop, and with the candles up, normally at 50% of this area. Sometimes you could barely get in there. And what you do, you see, it formed this candle. I didn't get the chance to, when you click on the candle here, TradingView gives you soon the candle. That's the way it is. So you would have put another order there, as I said, a limit, you would have got filled, or let's say sell stop here. When the candle goes down, that gets activated. And again, you would target that area on the next one, guys, because things are done bit by bit, okay? Things are done bit by bit, and that's why when you got here, probably people would have moved the stop loss to break even. And actually, you see, because it went down and then up, and look at that. So that's the way we can be tricked, guys. That's why sometimes I like to move the stop to 1-to-1, because not to have the the usual break even, but break even is also fair enough because you don't lose anything. And that's how it is. So guys, let me introduce you, let me show you actually how this finger works, which is a shakeout and shakedown. Okay, so let me just show you that. I'll just be transitioning now. Okay, let's say that if you put, let's say that this is like a finger with other fingers in there, guys. What does he give you? What idea gives you? Okay, I don't mean to be rude, as I said, but wouldn't it look like something like this, for example? Okay, you see this one here? This is the institution's sign, but just to say, hello, I'm waving at you. You buying, all the retail traders are buying, but I'm actually going on the other way. Okay, guys, so just take it not as something that really has to displease you, just something as something funny. Is part of our society. So this is the sign of institutional things, that what they do. I'm going up, hello, bye-bye, I'm going down. Okay, and when it happens on both sides, like in this case, then you see something like that. Okay, guys, then you will see something like that. Okay, because that's what happens. They have to collect orders, they have to mislead people. This was Bitcoin chart. It doesn't matter really what chart it is, but the point is that probably if he was in a downtrend, then that's it, goes up, then go down. Some people call it dead cat bounce, but for me, just for the type of mind that I've got, really, I just make fun of things. I just like to see this type of illustration. Look at here, shake both sides. You go up, shake people down, those sellers. They were selling, probably at their stop loss here or here, and then go up again. They start to buy again, and then probably the lucky one gets back to break even, or they just lose money probably. Okay, so why the price goes up so fast here? The reason why price goes up so fast, because all the stop loss here, guys, they were triggered, so they go down. This is like a bullish 180. Okay, strong candle down and soon the candle up, complete bullish 180. And which could be also bullish engulfing, as it is commonly called. So the price goes up because they need the liquidity. You see, they need our holders, the institutionals. And as you know, guys, after you are a seller, you become a buyer. Okay, this is a theory well known, especially in the stock market. Why is that? Because to get out to the position, once the stop loss is hit, you have to buy back. So when all these stop loss are triggered, these are all buyback orders. Okay, you were selling down and now buyback orders to get out with a stop loss. And once they are triggered, the price naturally does that move. So you don't have to say, oh, look, there was a news. No, it's just a normal phenomenon that the banks, institutions are doing. So after a buyer, you're a seller. After a seller, you're a buyer. And that is the dynamic that happens. So it is best most of the time when you are near this consolidation points just to wait a bit, because normally they will do that. Let's say that this was going in an uptrend. Normally they will do that, okay, to shake people up and down, only to take the price back in the original direction. Okay, it might do it like that, a bit more, but generally if they have done this and that, it's really difficult to see something else doing like that. Okay, so once they done all this thing, they probably another small one, and then they will take the price back in the original direction, assuming that this was going up. And the same, it can happen in a downtrend. So these are the warning signs of the institutionals, what they're doing to get liquidity. Okay, so I hope I've clarified this example, especially the one that when you sell, the stop loss will be triggered and naturally the price will go up. Okay, guys, so I will get to another video to illustrate you some more concept and to solidify the knowledge about this so you guys can practice. Okay, all right, and you can let me know if this is actually having some effect on you, because the point is looking at charts a little bit in a different way. Okay, you might have looked at chart for all your life, or I don't know when you start, a few months ago, a couple of years ago, and you cannot get this unblocked. Something is a bit blocked. So when you start to look at different patterns, different charts with a different vision, you you might have a better experience with trading and possibly making some more profit. Okay, so I will show you some more example in the next few videos. Thank you.